Operator request has been initiated. If you'd like to cancel this request, please press *0 again.
For an FY24 earnings conference call.
It is our pleasure to welcome all participants to the earnings conference call for Q4 and for the financial years ending March 31st, 2024. Joining me on this call is Pankaj Jain, President Retail and Marathon Capital, our Investor Relations Advisor. I hope everyone had an opportunity to go through our investor deck and result release that we have uploaded on the exchange and our company's website. Let me begin by sharing an exciting development. It gives me immense pleasure to share that our board of directors have approved acquisitions of 50% stake in Cross Casual Private Limited for a total consideration of rupees 166.51 crore. KCPL, which currently operates under the brand Cross Jeans and is business of manufacturing, designing and selling women's clothing including denim bottom and top wear. These strategic acquisitions will help us accelerate our entry into the women's denims and casual segment. The acquisitions coupled with our recent foray into a kidswear segment accelerate KCPL evolutions into a complete casual wear brand catering to the entire family. This is a milestone achievement for our company and provides us an opportunity to enter into a complementary line of business and help us to capitalize our existing distributions and sales network further. This will further also help to expand our addressable market size and capture higher consumer wallet share. Coming to the business performance for Q4 and FY24, the response to our trade show across our brands, including that for Junior Killer for upcoming Autumn-Winter 24 season, was encouraging. On the distribution front, as a strategy, we will continue to focus to add more exclusive brand-focused EBOs. This also helps to enhance brand visibility and goodwill. Coming to the financial performance for Q4 and for the financial years ending March 31st, 2024. Performing highlights for Q4. Revenue from operations for Q4 FY24 grew by 10% to rupees 219.4 crores as compared to 199.5 crores in Q4 FY23. Gross profit grew to 97.9 crore in Q4 FY24 as compared to 89.2 crores in FY23. Gross margin for Q4 24 stood at 44.6% as compared to 44.7% in Q4 FY23. EBITDA for Q4 FY24 grew by 8.7% to rupees 42.4 crore as compared to rupees 39 crore in Q4 FY23. EBITDA margin for Q4 FY24 stood at 19.3% as compared to 19.6% in Q4 FY23. PAT for Q4 FY24 grew by 19% to rupees 37.6 crore as compared to rupees 31.6 crore in Q4 FY23. PAT margin for Q4 FY23 expanded to 16.5% as compared to 15.3% in Q4 FY23. Performing highlights for FY24. Revenue from operation for FY24 grew by 10.4% to rupees 860.5 crore as compared to 779.5 crores in FY23. Gross profit grew to 373.3 crores in FY24 as compared to rupees 330.6 crores in FY23, reflecting a growth of 12.9% year-on-year. Gross margin for FY24 expanded to 43.4% as compared to 42.4% in FY23. EBITDA for FY24 grew by 16.6% to rupees 177.2 crores as compared to rupees 151.9 crores in FY23. EBITDA margin for FY24 increased to 20.6% as compared to 19.5% in FY23. PAT for FY24 grew by a robust 29.5% to rupees 154.5 crore as compared to 119.3 crores in FY23. PAT margin for FY24 increased to an impressive 17.2% as compared to 14.8% in FY23. The double-digit growth of 10% in FY24 with an impressive EBITDA upward of 20% despite a general slowdown in the market clearly demonstrate our company's business model resilience. Give the market opportunity coupled with a well-led outgrowth strategy resultant of both organic and inorganic opportunities, we continue to target a yearly double-digit growth in our core business. With this, I leave the floor now open for Q&A sessions.
Thank you, sir.
Yeah.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Ankit Babel from Subcom Ventures. Please go ahead.
Good afternoon, sir, and congrats for a good acquisition. So my first question is, if you could just give some more details about the Cross brand and the company in terms of, how is the profitability in this company, how is the working capital cycle here?
Hi, Ankit. Okay.
Yeah.
The Cross Casuals Private Limited is majorly into women's denim-centric category. That's one. Second, the working capital cycle is almost similar to as what Kewal Kiran is, which is close to around 120 to 130 odd days period. Okay. Major channel of sales is LFS there.
Okay. And how is the profitability?
Profitability, the EBITDA margins are similar to what Kewal Kiran has. Okay, close to around 14 to 15%.
Okay, our margins are at 20%. So
this was this year categorizedly. Okay, but if you come to a PBT level, it will be almost similar, Ankit.
Okay, so our PBT level margins last year were 21%, including other income. So,
yeah, that includes other income, yes.
So what was the PBT margins for Cross? Say last year?
14 to 15%.
14 to 15%. And what's your strategy going forward? How are you going to scale up this business to what level, and what's your call on the profitability front?
We feel that it's a right mix for us, since it allows us to make Kewal Kiran as a complete family apparel as a house of brands. It's a effective use of our cash reserves also. There is a matching working culture as well as a margin profile, and I feel the acquisition will have a positive impact on the revenue and profitability. Since it is majorly focused and in LFS, we feel that the synergies KKCL on the front will help to explore other doors and new doors of channels of sales for them, as well as manufacturing capabilities.
So what kind of growth you are looking at in this business, because the base is very small here?
It's too early to comment there, but still for the current year guidance, I would say it would stay similar to what Kewal Kiran has.
Okay, because in Kewal Kiran also, at the beginning of the year, you had guided for 18 to 20% top line growth, but we have ended somewhere at 10-11%.
We revised our budget.
I understand. Yeah, I understand. But
18%. Ankit, we revised it to a 15 to 18% guidance structure. Yes, the last quarter were little restrictive, and that's why the percentage has fallen down.
So on a lower base, again, you are guiding for just a double-digit growth. So is there any structural issue in the category wherein we are not in a, we are not able to grow it at a healthy pace?
We have to look at the market scenarios also. That you will performance structure wise. You have to look at the market scenarios also. What has happened is when the numbers were when I was planning it ahead, and the fashion is becoming more faster and faster and faster. If you see, our working capital cycle has reduced down because of that only, where we are trying to come more closer to the market so that we could address the market in a better position.
No, so what should we infer from here on? Is a 10-11% a new normal for the company, or you can do a 14-15% kind of a growth, or even 18-20 is possible?
For the FY24-25, our guidance is still at 15 to 18%.
15 to 18%. Okay, and EBITDA margins, you had shown a good improvement there. I mean, your EBITDA performance has been good. So, are the current margins of around 20.6 before other income, is it sustainable?
Our guidance would be around 15 to 18% there also. 18 to 20.
Margin.
EBITDA would be around 18 to 20%.
Okay.
We try to match what we are doing, but it depends on the market scenario. Try to understand if winter is bad, we have to go for the heavily discount. It's all depend on the seasons also, but still we say we will try to match that EBITDA margin.
Okay, and last question is on, sir, you had a healthy cash balance at the end of the year. I understand a part of it would be going to, for the acquisition part, but still you'll be left with good cash. So this time you have not given any dividends. So any reason for that? Because your cash generations will also be good in the coming quarters.
Ankit, actually, we are trying to taking acquisitions for this brand, and we are keeping some brand. And still we say we will keep some brand for the future, any natural calamities. So we don't want to, we want at least 250 crores, 200 to 250 crore, at least we will keep the reserves in the company.
That will continue forever, I mean, that's as a policy.
Yeah. See, last night, if you see 2021, there's corona calamities. We not fire any my employees, or we are not borrowing any funds. So that's why this fund is we will keep for any future calamities. But that 200 to 250 crores reserve always will be with the company.
But treasury will not go below 200 crores.
at least.
Okay. And sir, just one small more question. What's the distribution expansion strategy for this year? What kind of growth you're looking at in this year for expanding a distribution network?
Okay, the growth has been there. So I would say that, okay, when we are seeing on the entire perspective and we give the bifurcation, the retail as well as non-retail both have been growing at similar percentages.
No, I'm asking about the coming year. I mean, the FY25. What kind of growth you are looking at?
Are you talking about the distribution network? Are you talking about the EBO network?
Everything put together, EBOs, LFS, MBOs. So overall distribution network, what would be the growth? I mean, because the 15 to 18% growth which you are targeting, it would be a mix of retail area expansion, I mean the distribution expansion plus any SSG or, the like-to-like growth plus any product mix. So,
Correct.
So what would be the main driver for this growth? One would be distribution. So I just need to understand what kind of growth you are looking at in your distribution.
As you said, it would be channel expansions also, as well as the price bracket and my number of stores opening.
So can we expect a double-digit growth in the distribution in the retail area for you across all the segments?
Ankit,
there is going to be a double-digit growth. That's what the guidance is.
Ankit, we launched kids wear just this season, so I think so. This is also will add some turnover in the company.
But that you would have factored in while giving the 15 to 18%, or you feel that the kids wear will be over and above this?
That 15 to 20%.
The base is too small for that category. So, okay, I have already factored for it. So, on channel mix structure as well as the price mix, we stick to our guidance of 15 to 18%.
Okay. Thank you so much, sir.
Thank you, Ankit.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Palash Kawale from Nuvama Wealth. Please go ahead.
So thank you for the opportunity and congratulations for a good acquisition. Sir, just a couple of account keeping questions first. So what was the retail SSG for full year?
The SSG for the entire year was flattish.
Okay. And what was the contribution from winter wear for full year? Or what was the total sale for the whole year?
Winter and accessories total contribute to around 13% of the total business.
But what was winter wear sale? I think it was around 55 crore last year. So what was the number for this year? If you could.
Both the groups together of winter wear and accessories. So I said it totally contributes to around 13% of the business. Okay.
And sir, my next question is around Cross. So the number revenue for Cross for FY23 and 24 is flattish. So what was the reason for this?
Look, as I said, the market scenarios were such that it had to close on a flattish perspective.
Okay, sir. That's it from my side. I'll come back in the queue.
Thank you.
Thank you. We have the next question on the line of Srinijan Mittal from Ratnaraya Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So I have a couple of questions. So one is on the inventory days. This year our inventory days is around 30-35 days, which has come down from 80 odd days that we usually have. So can you just help me understand what would be the reason for that? Is it because we have made probably higher provisions or something? Can you just...
Nothing related to the provision. As we said, okay, fashion has been keeping changing and okay, market scenarios are such that we are trying, since we have an in-house manufacturing capability, we are trying to make our manufacturing setup also very real time and be close to the market. That's the only reason.
Understood. So it's the finished good inventory that we that we keep. We are trying to reduce the cycle for that.
Yes.
Okay, understood. Going forward, what? Okay, and so going forward also it would be in the similar range, like that is what we are trying to keep our inventory levels?
I will try for the same, but we say that okay, the working capital will stay between 120 to 130 days period.
Understood. Okay. My second question is that in this quarter, particularly, the other expenses is little bit on the higher side. So what were the additional expenses that we incurred this quarter?
Generally, one of the major perspective was related to the acquisition only. Okay, we have started since the discussion were on. We have already provided for that expenses.
Right. Understood. Just one last question, Pankaj. So, if we look at our core category, which is the jeans, that has done for the full year, that has grown at a pretty healthy rate. But if we look at the other non-core categories where we are trying to increase our sales, that is the shirts and trousers, the growth has been little bit lower than the core category. So, is it in the range that you were expecting, or what was the reason that we are not able to do such good growth in the non-core categories?
I would put it that way, the jeans, shirt and t-shirt have performed healthily well. Trousers, I think, okay, there has been a regrouping on our side where, okay, this year the cargo categories we have added in others as a category since it was a new category. So trousers got replaced by cargos. So if you see, okay, all the categories have actually grown, but because of our regrouping structure, things looking on a lower side there.
Understood. So cargos is then clubbed under jeans?
No, cargos is actually clubbed under others.
Others, okay, got it.
Pankaj, Pawan here. I just wanted to understand what would be the long-term growth rate that we should expect on the shirt category specifically.
Okay. See, we look at that our retail mix is going to increase. So it's an average basket size on that period. So we say that okay, it's going to be in the similar percentage of what the company is going to be. The two main categories, which would be jeans and shirt, would grow at a similar percentages.
Okay, you don't expect shirts to grow faster than jeans now, is it?
Not really.
Okay.
Okay, we have already built that base, and now we feel that okay, it will grow at the similar percentages.
Okay, and can you just talk about what are the kind of channel? What is the kind of channel mix in Cross? Is it totally large scale format stores, or is there some kind of MBO mix also in Cross?
90% of the sales is LFS.
Okay. And do we, as Kewal Kiran, get some benefit because of Cross coming in from the distribution perspective, or anything of that particular nature, or we don't expect anything of that?
No, I didn't get your question.
So Cross, does it have more reach in LFS than Kewal Kiran, or would the reach be lesser?
The number of counters would be definitely different, but performance-wise perspective, it helps KKCL to strengthen the position with those buyers.
Okay. So you are saying basically there would be stores which would be different in Cross and Killer.
Yeah, the parties would be the same, but the counters could be different.
Okay. Okay. And we can try selling both the products in different counters.
The synergy is to expand it to other channels of sales. That would be the major focus.
Fine, Pankaj. We'll join back. Thanks.
Thank you. We have the next question from the line of Himanshu Nair from Systematics. Please go ahead.
Yeah, hi sir, and thanks for taking my question. Firstly, could you now talk about over the next 2 to 3 years, how do you see your mix evolving in terms of men, women and kids post this cross acquisition and your recent entry which you had on the kids side? So once things scale up 2-3 years down the line, what is the sort of mix that we can expect in the apparel space?
It's too early to comment on that, okay, but we have already have orders in hand for our kids as a category, and the response has been good. Okay, ladies, okay, we we see the number to add up, but as a percentage mix, okay, maybe on the next console or maybe after 2 quarters, I'll be able to give you a ballpark number of how the mix will look at.
Understood, sir. Secondly, on this cross transaction again, in terms of the leadership team, I mean, would the existing team stay, or your existing guys will take care of that business now?
The one of the partners will stay and will be managing director of KCPL.
Okay, okay. And the other bit was on our capex. So apart from the store expansion that we will plan in for increasing our retail mix, do we plan any other capex, say on manufacturing capacity or warehousing capacity, etc., over the next couple of years? Anything in the pipeline?
Yes, we do.
So if you can quantify that, sir, what sort of?
Around 30 to 40 crores.
And that would be on?
On the warehousing capability structure.
And any manufacturing capacity expansion do we need?
Our warehouse plus manufacturing is an integrated model structure, so it's both put together.
30 to 40 over the next 2 years or both years, sir?
In the coming year, yes.
Understood. Understood. Got it, sir. I mean, that would be all from me. Thanks and all the best to the team.
Thank you. We have the next question on the line of Prolin Nandu from Edelweiss. Please go ahead.
Yeah, hi team. Thank you for taking my question. I have 3 questions. The first one is on this acquisition. Now, if we look at any women brands, right, there have been very few successes in terms of scaling up the brands profitably. So what gives us the confidence that we will be able to do this? And in terms of the brand that we have acquired, you have mentioned in the press release that they sell at around 1,000 plus counters in LFL stores. So that brings on an average 17 to 18 lakh per counters. So what has been the ranking in that particular category in some of these LFL stores, which will help us understand the strength of this brand?
So Cross Jeans is among the top 3 women wear casual brand in majority of the LFS stores. To answer that question. Okay, second question. Okay, we feel that since the penetration was more LFS driven, okay, we feel that the other channels of it could help Cross as an expansion structure, that we will expand other networks, our network of sales to them, so which is basically the distribution channel.
Sure. And currently, for Killer and some of the brands that we have, what would be the percentage of sales happening through women casual?
Negligible.
Okay. Okay. And so second question is that I wanted to understand your customer better in terms of our core denim segment. Who is our typical customer? What kind of socio-economic background does he come from? What's his age? And which are the brands that he will evaluate when he makes the purchase decision to buy our brand?
Okay. Generally, if I look at my B2B trade or my B2C consumer, okay, my core competition to Killer stays at Levi's, Lee, Wrangler, Mufti, Pepe, Spiker. That's the brand consideration generally when he goes to buy. Does that answer your question?
Yeah, it does. Thank you for that. Actually, can you just repeat which Levi's, Lee, Wrangler, and what did you say after that? I just missed that.
Pepe, Spiker.
Okay, and I mean what? So this is the brand that you will compare with, right?
Generally, yes.
Sure.
This is what I feel the B2B as well as the B2C consumer both compare with me with.
Sure. And last question is that, when we talk about EBOs, a large part of our EBOs are under FOFO model. So from a franchisee point of view, what is the typical investment that is required in store as well as inventory? And is this inventory on outright sale or SOR kind of model? And what are the IRRs that some of these franchisee would be generating What percentage of our franchisee would have given up our operations, and what could be the reason for that in last couple of years?
The typical investment stays around 4,000 rupees a square feet. Store size is right now at close to around 500 to 600 rupees, 500 to 600 square feet. Okay, on the investment cycle, I said 4,000 rupees. That includes the capex as well as the opex cost or the inventory cost. Whenever a franchisee is approached, we prepare a P&L which says that the first year return would be close to around 18% period, but going forward it's close to around 24% period. 24%.
Sure. So 18 to 24%. And how many franchisee would we have closed for the last 2 years in FY24 and FY23? And what were the reasons for that?
Some of the reasons would be that most of the stores which have closed down are generally relocated, which were related to K-Launch only, okay, which have been relocated or have been brand with Killer now. But there will be some set of percentage which is close to around 5 to 7% closures would be staying, maybe because of the performance, maybe regarding to the area changeover structure, maybe or something or the other.
Sure. So on an average, 5 to 7% is the closure rate, right?
Right.
Okay, that's it from my side. Thanks a lot.
Thank you. We have the next question on the line of Sahil Doshi from ThinkWise. Please go ahead.
Hi, sir. Good afternoon. My question relates till, like you said, till Q3, we were expecting a slightly better outlook for Q4. Now we've seen winter, though it was delayed, but later the onset was better, and we saw the other players actually doing far better. So what really transpired? Why is the growth profile being weaker than what we were expecting? Second, related to the channel expansion, for the year we were expecting around 50 to 60 stores, and we've come at around 34 stores. So what's the dynamics now, and how confident are we of these 60 stores which are in pipeline coming through in the next year?
Okay. Coming to the store perspective, okay, if you have to, Sahil, you have to look at the market scenarios also. When the market scenarios are weaker, okay, the timeline taken for discussing and starting a store takes a longer period phase. We still have stores in pipeline, and we still feel that close to around 50 odd net stores we will be adding this year itself.
Okay.
The majority of the net closures, as you said, were related to K-Launches, which have been closed. Some have been relocated and branded with Killer now.
Right. So, meaning that entire transition phase now, are we complete with our strategy, and what would be our strategy going forward?
One phase at a time, so it's not yet completed. So if you'll see, as of March 24, there was still 144 K-Launches as of March 24.
Okay. And going forward, now these new expansions will be in K-Lounge, or it will be in the Killer?
Majorly, it will be into the branded segment, which will be Killer and other brand EBOs.
Understood. And so for the next year, essentially, when we are guiding for 15 to 18% growth, assuming we'll have boys also, which will possibly do 30, 50 odd crores, which is almost 5-6%. Are we building in like a flat same-store sales growth for the FY25?
Kidswear is still a smaller business perspective over the overall business. I don't see there will be a close SSG, but will be a single-digit SSG for the retail stores. We feel that 15 to 18% contribution will be in terms of quantity as well as value.
Okay, so because 7-8% could come through your footprint expansion, 2 to 3% from SSG, and then balance from new categories. Is this how we should think about it?
5% you could say to SSG contribution. New category will be lower because new category will be on a lower percentage of that mix.
Understood. My other question relates to the acquisition. Now, we've acquired only 50%. So is there an optionality which you have going forward to take the full control? And second, do we still have cash balances? Will we yet look at other pockets of acquisition going forward as well?
The existing promoters wanted to have equal shareholding, wherein Ravi Punjabi will be as the managing director of the brand and continue to lead the business. We were impressed with the founder as well as the way he has been able to create a credible brand in unpenetrated and complemented women denim wear category. When you talked about the buyout structure, because of the confidentiality, I can't discuss over the additional percentages structure.
Understood.
But we have taken opinion from our reputed advisories where we'll be able to consolidate as per the accounting standards.
Okay. And just a related question, the PAT for this year will be what, 17, 18 odd crores or higher?
I said the PAT is around 14 to 15%.
Okay, I thought that is EBITDA you said.
PBT. PBT is around 14 to 15%. No?
Okay. And just the other question related to further acquisitions, are we yet open to looking at more acquisitions in the complementary spaces?
We have not completed the entire wardrobe yet, and so we do look forward for it.
Understood. Thank you so much. I'll come back in the queue for further questions.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question on the line of Palash Kawale from Nuvama Wealth. Please go ahead.
Sir, thank you for the opportunity. Sir, my question is on Cross. So what would be the price range for Cross? Hello?
Denim is around 1299 to 1999 price bracket.
Okay. And what is the ASP?
ASP is around 850.
Okay, thank you for that. And sir, the Cross is mainly focused on LFS channels. So do you think that our MBO network of MBO could benefit it in scaling up at a faster rate, or it would be a LFS focused only?
I think that was the synergy, and that's the reason. It was one of the reasons for the acquisition.
Okay. And sir, what are the other two brands? Like you mentioned that Cross is among the top 3 brands. So what are the other who are the other competitors in women's wear?
Device would be one. Veramoda. Veramoda and only would be second.
Okay. Thank you, sir. Thank you for your answers. And sir, what are our store addition plans for FY25?
$60 to $70 years.
60 to 70. And sir, any plan to increase the price now in the coming year? Like our ASP has suffered because of multiple reasons. So do you foresee increase in prices from now on or stable ASP?
We still look that there will be a price increase for the current year.
Okay. And sir, how is the demand and footfalls are panning out in Q1 now that the April and May months are gone? So is there any pickup or the situation is still the same?
Market scenarios are not exciting.
Okay, sir. That's it from my side. Thank you. Thank you for your answers.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question on the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Sir, a couple of questions again. In the press release, you have mentioned that you are spending some 166 crore rupees to buy 50% stake. Now, out of this 166 crores, some money you would be infusing also into the company. So, what would be that amount which you are infusing into the company?
It's a combination of primary as well as secondary.
Yeah, can you just give us the breakup?
Primary infusion would be not a significant amount. It's just related to working capital.
So, what it would be, sir, amount-wise?
I can't give you an exact number for that, but okay, it will be just related to the working capital. Is that what I can say?
So less than 10 crores is what you are, as it's immaterial, then it would be less than 10 crores.
It's significantly lower to the total deal value.
Okay. And this 166 crores, how the payment structure would be? I mean, at one go you'll be paying everything once you get all the approvals, or how is it?
Major proportion is at first outgo, but then it is paid in tranches.
So again, can you give us a breakup of that?
I am sorry, I can't disclose the exact number to you.
By when can we expect the consolidation to take place?
There are certain precedent to be met. I feel 45 days period would be good enough.
Okay. Somewhere in July, we might get the control.
Could be.
Okay. And sir, what would be the amount of goodwill that would be created because of this acquisition?
I think I can answer you in the next call perspective that will give you that answer for the same.
Okay. And you mentioned that I'm sorry I missed that part, what you said about the remaining 50% stake in the company. Do you have the optionality to buy it, and if yes, then how the valuations would be decided?
The current, as I said that the current partner is interested to run the business. So it's a new marriage perspective. We have some numbers, but because of the confidentiality, I can't disclose anything regarding to the second tranche perspective.
Okay, sir. Thank you.
Thank you. We have the next question on the line of Rohit Jain from Anand Rathi. Please go ahead.
Good afternoon, sir. Sir, am I audible?
Yes, you are.
Yeah. So my first question would be related to the acquisition. So would the acquisition of Cross would mean discontinuation of Decibel, which we are currently associated with, or it would also continue Decibel?
If you see, it's a smaller business size of the total business. Okay. As of the current quarters, we don't see there will be a discontinuance. However, we will evaluate after a 2-quarter structure that how the brand will go forward with.
Okay. And so my next question would be regarding the ASP of Cross. So what is the ASP of Cross?
So it's around 850.
Okay. And are we aiming to increase or keep it the same which it is right now?
It's too early to say. Because just we completed the acquisition. It's too early to say anything. So it will take some time, at least quarter or 1 quarter, then we'll let you know.
Okay. And sir, so we have acquired 50%. So would there be consolidation available to us, or?
As I said that yes, we have consulted the tax advisories. There will be consolidation available to us.
Okay. And sir, coming to my next question, how has April and May been currently and in this quarter? And what are we looking at in FY25?
For the entire FY20?
No, in April and May.
As far as April is concerned, the April business is good, but May is little bit slow. But okay. We says ki we will grow by double digit. So you have to see the festival and the season, because this time in May there is no marriages, and even that's why the market is little bit low. And the Diwali is also early. So we see if you have to compare, then compare 2 quarters continuously, Q1 and Q2, and after that you can see the results.
Okay, sir. Thank you, sir. That's all from my side.
Okay, thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Arpan Rathod from Inside Advisory. Please go ahead.
Good afternoon, and congrats on the acquisition. My question also revolves around the acquisition. Just wanted to understand in terms of capacity for Cross. Is it are they at full capacity utilization, which will entail us more capex going forward? How's the scenario out there?
The infusion is mainly related to working capital cycle. Okay, they don't have their own house manufacturing. Okay, that's where one of the aspects where synergies lies with Kewal Kiran.
So, in that sense, we would be doing manufacturing for them?
Could be.
Could be. Okay. Yeah, that was one. And secondly, how's the kid wear segment doing?
Sorry?
The kids wear segment.
We have already launched it at the store perspective. The first 2 months looks encouraging. We have orders in hand for the going forward season also, and the orders are also encouraging.
So if we have to sum it up, how much is the kids segment revenue which we are expecting or which we are targeting for FY25?
It will be a major proportion of the total business.
Okay. Yeah, that's it from my side, and all the best for future.
Thank you.
Thank you. We have the next question from the line of Sahil Doshi from ThinkWise. Please go ahead.
Yeah, hi. Thanks for the opportunity again. We used to give MRP turnover. What will that number be for FY24?
Around 2,300 crores.
Okay.
Approximate.
Understood. And sir, on Cross, in terms of strategy, would we look to take this to MBOs and even EBOs, the new revamped K-Launch? Is that how it will be, or do we plan?
Kyle, you are not audible.
Hello. Yeah, on Cross, my question was on Cross. In terms of incrementally, do we look at expanding more EBOs, or this will be now part of the revamped K-Lounge?
Sorry to interrupt you, Sahil, but your audio is sounding very muffled. If you go off the handset and come on speak directly to the microphone.
Hello, I hope this is better.
Yeah, this is better.
Yes.
Yes. On the cross distribution strategy, if you can possibly incrementally, will it be a part of EBO route which will be taking, or it will be the MBO and the distribution, that channel which will be taking forward?
So we feel that the growth aspect would be more on the distribution as well as retail.
Okay. And the other question was, if I see there's a brand called Isel which now you all have developed for the, which I see in Shopper Stop as well. Could you possibly comment on the strategy of multiple labels in women wear, and what's the idea from a 3-year, 5-year perspective from the women wear category as a whole?
But Sahil, the total women wear category structure, it was started 2 seasons back. Okay, the total ladies women's wear denim wear category or the total women wear category for Kewal Kiran is still negligible. We were exploring these ideas of maybe getting the counters on such LFS count to see the performance structure and to evaluate to test the waters. After the acquisition, we will, after 2 quarters, maybe we'll be able to give an exact picture where every brand, all the ladies brands, where will they position, or will there be any change in the profiling of the brands also?
Understood, sir. Thank you so much and best wishes for the year.
Thank you.
Thank you. We have the next question from the line of Deepak Lalwani from Unified Capital. Please go ahead.
Hello, sir. Congratulations on the deal.
Thank you.
Thank you.
Yes. Firstly, on the deal structure, so you mentioned that the cost related to the acquisition has already been factored in. Is there any hit that we could see from?
I didn't say that. I said any expenses which we could foresee and we could provide for it, we have already done for it.
So should we foresee any inventory or receivable hit from this acquisition? Is there?
No.
Okay, sure. And secondly, on the Kewal Kiran business, we have seen growth in the non-retail channel for this quarter, and the retail channel has sort of been muted for the last 2 quarters. So within retail, is it the LFS or is it the EBOs which have slowed down in terms of growth rates?
Both are related to secondary markets. So, okay, both are in at similar percentages, Deepak.
Okay, sure. Got it. And what will be the online contribution for the full year? Online revenues?
Deepak, we give bifurcation of retail and non-retail only.
Okay. Sure, sir. Thank you. Those were my questions.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Okay. I would like to once again thank all for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you all.
Thank you. On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay, thank you.